Corporate tax in United Arab Emirates. What is a global minimum tax and what will it mean? Base erosion and profit shifting. BEPS practices cost countries 100 to 240 billion US dollars in lost revenue annually, which is the equivalent to 4 to 10% of the global corporate income tax revenue. Working together in the OECD G20 inclusive framework on BEPS, 141 countries and jurisdictions are implementing 15 action point plan to tackle tax avoidance, to improve the coherence of international tax rules, to ensure a more transparent tax environment and address the tax challenges arising from the digitalization of the economy. Salient features are as follows. Number 1. 136 countries have signed a deal aimed at ensuring companies pay a minimum tax rate of 15%. Number 2. The global minimum tax rate would apply to overseas profits of multinational firms with €750 million, $868 million, in sales globally. Number 3. The countries behind the global minimum tax rate together account for over 90% of the global economy. Number 4. The OECD, which has steered the negotiations, estimates the minimum tax will generate $150 billion in additional global tax revenues annually. The agreement calls for countries to bring it into law in 2022 so that it can take effect by 2023. Accordingly, United Arab Emirates has introduced a corporate tax on January 31, 2022. United Arab Emirates' new corporate tax regime. United Arab Emirates has introduced a 9% corporate tax on the 31st of January 2022 by the Ministry of Finance. Effective from the 1st of June 2023, the new corporate income tax will become applicable across all Emirates of the United Arab Emirates. The 9% federal corporate tax is the lowest in the GCC, compared to the rates adopted by the other countries in the GCC. KSA 20%, Oman, Kuwait 15%, Qatar 10%, United Arab Emirates 9%. Corporate tax rates around the world in 2021. Comoros, 50%, Puerto Rico, 37.5%, and Suriname, 36%, are the jurisdictions with the highest corporate tax rates in the world, while Barbados, 5.5%, Uzbekistan, 7.5%, and Turkmenistan, 8%, levy the lowest corporate tax rates. The worldwide average statutory corporate income tax rate, measured across 180 jurisdictions by Tax Foundation, is 23.54%. When weighted by GDP, the average statutory rate is 25.44%. Asia has the lowest regional average rate, at 19.62%, while Africa has the highest regional average statutory rate, at 27.97%. However, when weighted for GDP, Europe has the lowest regional average rate at 23.97% and South America has the highest at 31.03%. What is corporate tax? Corporate tax is a form of direct tax levied on the net income or profit of corporations and other businesses. When will the United Arab Emirates CT regime become effective? It will become effective for financial years starting on or after the 1st of June 2023. Will United Arab Emirates CT apply to businesses in each emirate? Yes. The United Arab Emirates CT is a federal tax and will therefore apply across all emirates. What will be the role of the Federal Tax Authority? The Federal Tax Authority will be responsible for the administration, collection, and enforcement of United Arab Emirates Court. Threshold limit and tax rates. Taxable income up to United Arab Emirates dirham 375,000 to 0%. Taxable income above United Arab Emirates dirham 375,000 to 9%. All other cases. Rate to be released by FTA in respect of MNCs whose global turnover is above €750 million. What is adjusted accounting net profit, income? United Arab Emirates has proposed to levy corporate income tax on the adjusted accounting net profits during an assessment year. The accounting net profits, income of a business is the amount reported in the financial statements prepared in accordance with internationally accepted accounting standards. Features of the announcement. The said announcement has briefly specified the following features of the corporate taxes to be implemented. The authority shall publish the further details regarding registrations, guidelines, payments, etc. in due course of time. Exemptions available for individuals in their personal capacity. These are the exemptions available for individuals in their personal capacity, like salary income, real estate income, interest income, and dividend and capital gains income. Exemptions available for companies, others. Number 1. Freezone firms will not pay a new levy if they do not conduct business in mainland. United Arab Emirates (CT) will continue to honor the CT incentives currently being offered to Freezone that comply with all regulatory requirements and that do not conduct business with the mainland in United Arab Emirates. Foreign investors who don't carry on a business in the United Arab Emirates will not be subject to corporate tax. Practically, all export-oriented companies in a free zone will only get the benefit of corporate taxes. However, all businesses established in free zones will be required to register and file a corporate tax return. Taxable profits earned by free zone entities from business activities in United Arab Emirates mainland is subject to corporate tax. Number 2. With the implementation of CT, the United Arab Emirates businesses will need to comply with transfer pricing rules and documentation requirements concerning the OECD transfer pricing guidelines. Number 3. Capital gains and dividends received by UAE businesses from qualifying shareholding are not subject to United Arab Emirates CT. Number 4. Withholding tax on domestic and cross-border payments is not subject to United Arab Emirates CT. Number 5. Intra-group transactions and reorganizations once necessary conditions are met are not subject to CT. Number 6. Businesses engaged in the extraction of natural resources will remain subject to Emirate-level corporate taxation and be outside the scope of the United Arab Emirates CT. Other features. A group of United Arab Emirates companies can form a tax group to be treated as a single taxable person and file a single return for the entire group, provided certain conditions are met. If said conditions are met, excess tax losses may be carried forward and used against taxable income in future years and group company income. Only one corporate tax return will be needed to be filed electronically per financial period. No provisional or advance corporate tax filings or payments will be required. Thus, the introduction of CT is not to hold back the spirit of business in United Arab Emirates but to reaffirm the United Arab Emirates' commitment to meet international standards for tax transparency and preventing harmful tax practices. Thank you for watching our video, Corporate Tax in United Arab Emirates. If you like this content, please hit the like button and subscribe to our channel for more updates. If you have any queries related to corporate taxes, please feel free to talk to us. RBS Auditing, RBS Tax Consultant. Email rbs@rbsaccounting.com. +971 45839911. Or visit our website www.rbsauditing.com/services.